Hello and welcome again on Stocks Advisor channel. In today's episode we will talk about KOSS Corporation, traded at Nasdaq, ticker name KOSS. Well, KOSS is doing, of course, enormous growth, enormous action moves. It's really incredible, more than 100 times in no time. And of course you would ask yourself what's going on with the company. It is, well, it's simple. When you look at it, it's a company with a market capitalization of about only 242 millions, and as we know it, any company that is below $500 million or even sub-billion, they go for enormous volatilities on any news, and especially companies that are below $500 million just could go crazy. And that's exactly what we see here in general, and of course it goes up and down with the same enormous volatilities. And as you can see, by just starting end of February, just from the level of let's say about 350, we went all the way to actually 150 something plus, even higher. Now we are going down. We went down till almost sub 10 by beginning of March, and then big waves. So now what we saw, and that's the question is, what we saw in general was kind of a skewed cup and handle. And next question is, what's now? Are we going to make a third wave, or are we going for correction? Because if you look here, the latter part, let's look at it again, looks like kind of a small triangle, kind of a flagging triangle. So if you look at it, you could see this formation of triangle here, and it might resolve upwards as well. Or it's still, if you look otherwise, again, let's have a look. You could say there is a very strong resist level here, which is just we cannot penetrate. So there are several ways to look at it, and the level of 35, therefore this one becomes really pivotal, very important, and most of probably it looks like it is a temporarily resist, but still could be pierced as well. So we really need to be very cautious here. We need to mitigate many things. We need to mitigate enormous volatility if we would like to engage into this stock. We need to mitigate let's say corporative news, corporative risks like bad news. We need to mitigate small market capitalization, etc., and also resist levels. So how to trade here? First of all, as always, we have free moving averages here, as always, at our daily candles. These are 20 and 50 and 200 moving averages, being green, blue, and red line correspondingly. And if you look at them, you can see that recently they started again moving upwards, but linearly. For the last week, they're going up linearly, meaning there is zero second derivative. So it's going up, but it's not accelerative nor decelerative. So it could resolve in both cases. Of good things still, it's that RSI is overall tending upwards, but it might make spikes. So it could go like this before it really resolves somewhere. Another important moment, which is positive, is that we don't have too big spike of the volume recently. It's just still within, let's say, the range of noise, a bit higher, but still there. So we don't have any big decline or big buy. And this means that also it's still not that big exchange of the volumes if you compare to 28.90 current price, and also the previous 4 days ago big volatile white candle here. So it means it's still deciding, and once it decides, it could go really fast. So how to trade here? Therefore, the first immediate buy would be, and again here will be very big volumes, so very big channels. We will later also discuss how to enter into these channels, but they will be broad. So let's first to discuss the channels themselves. The first channel to enter would be the channel between actually the current price action and the channel of S1, which is forming itself as a kind of a natural volatility or support point. Previously worked also as a resistance, so now it works as a support point. And with this being said, here it will be the entry between 25 all the way to 28.90 with an immediate buy. And again, this is very volatile stock. So usually at our channel, we advise from 10 to 15% profit taking. Here, because it's very volatile, would be a little bit bigger. It will be from 15 to 20% profit taking. Once you have it, really don't hesitate, take it and enjoy it. Then you can either re-enter or check other videos. Even those that are uploaded to our channel 5 weeks ago, they are still fresh and ready for analysis, especially if we are speaking at the lower support levels. You could be just in time to make your profit. So this would be the first channel. Then if we go upwards, really aim for the profit, take it. If not, if we go for correction, this is still possible, because if you look also at MACD histogram, it's now going up, so it's kind of topping. So on the top, if we are not going to make secondary wave upwards, it will actually go for correction negative, and this could cause price to really go down strongly, so we need to be prepared. And speaking of this, of course, immediately the best channel to enter would be between moving averages 20 and 50. They will work as a very strong support levels, especially you can go a bit lower even, so this would be the support level of 12 and all the way until actually the moving averages start to play the game between 15. So this will be another support level, and here it will be not the usual 5 portions, it will be really many levels, and because you really need to play very cautiously. And since at our channel we advise always one of the most cautious, one of the most safest approach, although taking a bit longer time, but safety is our priority. So we will discuss more average down levels here. So still within the volatility, within expected range, you could go all the way to 12.15. Yes, it's 2 times lower indeed, but it's nothing for this stock. You could see the previous wave was almost 2 times decline, and as we know, it's a very small market capitalization, so these waves are very okay for this one. So the second channel would be between 12 to 15. Then the third one, still within the let's say more rare volatility, but still possible. And then if happening, we need to go to very principal support level, which will be actually moving average 200, and then this double channel, which will be between actually just 830 and 6. And this channel, why is it nice? Because by that time moving average 200 will be also there. This will make it a very strong double support, and this will be the final technically based pullback, which will be, if we write again in numbers here, should be between actually 6 all the way to 820, something like that. So of course it's again almost 3 times lower than the current price action, but as I said, the volatilities are enormous, so we need to be very cautious. And then we need to take into account a negative catalyst. Negative catalyst could kill this one, because this is extremely volatile, extremely overboosted, very small market capitalization, technically speaking penny stock with enormous volatility. So, and since our priority is mitigation of all possible risks, we really need to go, or let's say keep some funds, not to go, keep some funds for possible super strong doomsday average down if very negative catalyst kicks in. But then again, it's no surprise, no, let's say, no difficulty to understand what the channel would be. It's just the previous channel of the trade where we were strongly sitting. Also by the last half year, it was kind of reachable by top of the previous channel. So this would be the channel between actually let's say about 3 and all the way till 380. So that would be the one. And the reason we want to really go there, because these are the levels what we could expect, and if we go that levels, we really need to be sure that we can average down really nicely. So to be more precise, again, if you look carefully, it will be between even 250, I would say, and 350. So this would be the best 250, 350. That would be the channel. And again, it's not that we predicted. Of course, you can see, wow, this is 10 times lower. What's going on? No, it's not that we say it's going there, but again, this is extremely small market capitalization company. Whenever bad news comes, it could return to its previous price actions, because also don't forget, just by December it was 250. So this would be therefore 250 to 350, the last one. And of course it might look crazy, it might look scary, but when other people will be living in numbers and taking losses, you will be just averaging down and preparing for a major boost, for major rebounds from any of those levels. Of course, you might keep it longer if you like, but again, our advice is 15 to 20% profit from the money allocated in the position. Just take it and enjoy, either re-enter or check other opportunities. So with this being said, that's the playing card. It's over safe and it's done in purpose. So this is numerical and graphical representation. It's really done in purpose because our strategy, it's better to spend a little bit more time but exit with a profit or at least with a draw without taking any loss, because this is important. We are not daily traders in a sense. We are not sitting with 8 to 6 screens around us with blinking 15 minutes, 1 minute candles. No, for these people, of course, time is more important, so they take loss. But for those who just trade once in the evening, just place their orders, observe the stocks, and then just wait for the profit. It doesn't mean that it's a small playing with small money. You can still play with millions if you want, but it's just different style of trading. And for those people, it's important to exit with profit. So invest cautiously and profitably. Therefore, mitigation the risks is the key, and that's the way we also provide our opinions in the video. So with this being said, the way to average down here would be very safe. It will be 1, 2, 2, so it's a 6 portion play, a little bit different from what we usually advise at our channel. So what does it mean 6 portions? It means that the money you would like to trade here, you can split in 6 portions. Then you can buy with 1 portion in the first channel. If needed to average down, again you average down with 1 portion in the second channel. Then if really major correction takes place, you average down with 2 portions, and if a negative news kicks in and stock goes to, let's say, to its previous lows, you just average down again with 2 portions. And as I said, while other people will be taking losses, you will be just entering and preparing for the profit. So it should be very safe trade. Again, this is not just randomly declining and buying more and more. This is based on principal support resist levels where it will rebound. So if you like to engage with KOSS, that would be the trading strategy with it. Good luck with it. Also, please don't forget to subscribe to our channel. For your first time watching this video, check other videos as well. We discuss their strongly risk mitigated approaches for different stocks of interest. And with this being said, good luck and see you at another episodes of Stocks Advisor channel.